that I think the Super Bowl of stock market uh, perfect storms aligning this week because we're going to have a flood of earnings coming out, along with the Federal Reserve coming out with their announcement for the month of January. But forget about that. Really doesn't matter. We know what they're going to do. Pretty much a lot of nothing. What we're going to focus on is November. Not November. We're going to focus on March. I'll get it right eventually. March and, of course, May. The futures markets are open. We're going to segue over and into them right now. So welcome. Let's say hello to folks as you saunter on in. Mike, hello. Welcome. Talon, thank you. Welcome, sir. Netflix on the we're actually short of Netflix. We have two trades on Netflix. One is a strangle. The other we put on a short trade when it got to extreme overbought levels. In fact, we'll go over the why behind that trade in a little while using a 15-minute chart. We'll talk about the strategy that we employed on that trade and why we kept it over the weekend, because I think that Netflix is due for a correction. Talent, again, thank you. Jeff, welcome, sir. Corey, good evening, Bob. Could you look at RUM, please? RUM as in Rumble. Is that their symbol? Is it RMBL? If I can get to everyone's symbols tonight, I will. I don't think I have a lot to go over. I should be able to do it. Sean, hey, brother. Okay, let's cut to it. The futures are now open. Let me share my screen here. I'll be playing a couple of videos, so I have shared my audio, and let's get to it. So we have the E-minis that are open here, and we saw a big gap down. We were lower. We're actually off the lows of the session. Now, the intraday trend, as you can see here, out to a 4-hour bar, 4-hour time frame, we're seeing a bit of weakness on the E-minis. That could change by tomorrow morning. But at the open here, not a great open. Perhaps yields will give us some insight. Perhaps the price of oil will give us some insight. Let's take a look at the NASDAQ, the NQ. NQ down just about 1/3%. Didn't want to do that. Come on, man. I want to point out something to you here. Let's take a step back, and this is only a 5-minute time frame, but take note of the head and shoulders setup. Left shoulder, head, right shoulder. We broke the neckline right at the open here. Actually, to be fair, we broke it on Friday afternoon. They did an after-hours retrace, and now you're seeing the rejection. This is not a pretty open here for the NASDAQ 100 or the E-minis. Let's take a look at the Russell 2000. In fact, I had the Dow in front of me. Let's go to that first. Dow, big gapper here on the Dow Jones, down just shy of 1/4 percentage point. Same setup here, head and shoulders setup. Again, 5-minute chart, very short duration. We don't want to read too much into a 5-minute chart. Let's pull back. Let's play a game here. 30-minute chart. Nothing more macro going on here except you have a lower high. And now we're breaking down to a potential, way too early yet to make the call, but a potential lower low 30-minute chart. Back to the 5-minute time frame. Now let's take a look at the Russell small caps. And they are down about 1/3% as well. Trying to get a feel for, that's some good volume. Let's go back to the NQ for a moment. New 5-minute bar. I want to get a feel for whether or not there's more selling behind that open. Let's just set up an alert here. And to be fair, okay, so we bracketed it. Now we let the alerts do our job for us, so we're not staring at it. We went over the Dow. We went over the equity markets. Let's take a quick peek at volatility. Volatility was very, very strong late last week. And I even tweeted out, I think it was on Tuesday night or Wednesday night on Twitter. I said, watch the 60-minute chart. In fact, let's go to it. I said it was extremely oversold right here, and that we should expect a rally. And we got that rally. And this is a 1 hour chart. This is looking like a healthy chart here. Moving averages. These are all Fibonacci moving averages. They are all rising. And that sets the stage for the same pattern we saw back here, which should be technically bearish for the S&P 500. We're only not even 10 minutes into the new week so far, so let's not draw a bunch of conclusions quite yet. Let's go back to that 5-minute chart. Pulling back, retesting, rallying. There's a bid under volatility. Let's check out the U.S. dollar. The U.S. dollar was very strong late last week, and we have a strong open here. Now, this is not good for your multinational stocks. They don't want a strong U.S. dollar because it makes our exports more expensive overseas. So at the open here, dollar strong. Let's take a look at yields. Ooh. So they dropped yields at the open, second 5-minute bar. This is a very strong rebound here. I mean, wow, really strong rebound. So much so that we need to put an alert up here. Okay, so yields up, VIX up. Actually, I'm sorry, yields are down still, but they're off the lows. Let's check in with energy prices here. Okay, so this is a problem. This is a problem here. You have light sweet crude up again. Light sweet crude. I don't know if you took a look at the energy stocks last week. They were probably the best performing group on the week. And they're 85% correlated with oil, and oil was up as well last week. Now at the open, we're up over a percentage point. Why? You have a British tanker that is on fire over in the Middle East. Let's check in with Nat Gas. Nat Gas saw a reversal day on Friday, but net on the week was pretty weak. And we are down another percentage point at the open. Big gap down here on Nat Gas. One hour view. You can see how they rallied it back, but it's so volatile. So volatile. I was going to open up a trade here on Friday. I decided not to. I'm kind of happy I didn't. So volatile. Back to the 5-minute chart. Let's check in with. Let's go to you know what? Let's go to precious metals. Precious metals. Let's go to GC gold. Now, this is impressive. This is not the Only time we've seen this in the past couple of days. Think about it. You have the US dollar that's up, yields that are off their lows, still down, but off their lows. And you have gold, which is gapped up and is not giving back much here. So, how do we interpret this? Well, whenever you see gold and the dollar rallying together, normally that is a geopolitical risk off event. So money is going into gold, it's going into the dollar, seeking safe haven. Obviously, the price of oil is being bid up out of concerns out of the Middle East. So buckle up here, folks. This could be a rocky week. I think either way, it's going to be a rocky week, but this is just adding, pardon the pun, fuel to the fire. Home heating oil futures, they're skyrocketing up higher. Sorry about that noise. Let's check in with, do I have gasoline up here? Gasoline prices were up about 2.5% last week. We had the PCE report that came out. That is the Fed's favorite inflation gauge that came out on Friday. And it was fairly benign. But what people need to do is stop thinking about the last report and start looking at the future report, because that is what matters. And what we're doing right now is that we're formulating our own PCE report or CPI report for next month. We're looking at the input costs, gasoline futures, and they're up. They were up over 0.5% earlier. They're backed off their highs, but still a respectable gap up on the week. I believe this is a new weekly higher high, and it is. Back to the 5-minute chart. Let's check in with silver. Silver prices ripping here. Silver prices up over 0.75%. And think about it. The dollar is up. They're not supposed to be trading together. Gold should be down. Silver should be down. This is fear. This is fear driving these prices up higher and driving equities lower. Let's just check in with volatility again. Gapping up. All right, taking a look at agriculture prices. Let's go to the weekly view, get that macro view. Not much happening in the world of corn. This is still bearish. The trend is still down. It was still below this 21-period EMA moving average. In dotted orange, that is not a bullish sign. The path of least resistance remains down, even though I think the DBA, the agriculture ETF, was up at least early on last week. Soybeans, they are getting annihilated. And wheat prices are up fractionally, at least last week. Let's check in with DBA. How'd that close out? This really doesn't make a lot of sense to me at all, is that we have all of these agriculture products that are down, yet the DBA agriculture ETF has been rallying. This must be overweight a commodity that I'm not going over right now. It must be heavily weighted towards it, and it's bringing the DBA up. I'm not sure what that product is, though. Let's take a look at live cattle, see what my New York strip is going for. In fact, I cooked New York strip last night. I think I did a wonderful job. I did a pan-sear, beautiful crust, sauteed portobello mushrooms in there as well. Delicious, if I do say so myself. Yeah, it was really good. I digress. Live cattle rallying back. So we have protein prices on the move, back up higher. This is a breakout, bullish setup for live cattle, unfortunately so. Let's see what Brent crude is doing here. I want Brent. Here we go. All right, so Brent is giving back some of the gains at the open. We're still up just about a percentage point. Let's check back in with light sweet crude, because this is important. Now, light sweet crude is off of its highs, but appears to be getting ready for another run. And we're still up over a percentage point on light sweet crude. Okay, let's go to comments. TZ Burton, welcome. Seymour Rivers, welcome. Thank you, sir. Always welcome that production quality feedback. NVIDIA and AMD are always on the watch list. Great trading vehicles, yes. Miss Jody, welcome. Hope you had an awesome weekend. Talon, you got it. You got it, Talon. PBR. Petrobras? Is that Petrobras? Amazon, certainly like the scalp call options on the intraday setup. Is there? I'm going to start following Volt, taking ADD, market breadth indicators closer. Okay, cool. All right. Let's get to the news that's out there. Now, I went to the gym this morning, and my wife comes up to me after I get back from the gym, and she starts asking me questions about what's going on with Texas. And my wife, she's not into this stuff at all. You know, she watches the mainstream media. She still thinks it's real news. And so I spoke with her about it for a while, and automatically it got my antenna up. I'm like, okay, here's my contrarian antenna. They're on fire, because she's hearing about how Texas is standing up to the federal government. And I said, you know what? This seems a little bit too good to be true. So I've been spending a lot of time on Twitter today. And just before I went live, I found this. And I saw a bunch of other videos as well. But I wasn't gonna share them. I was gonna skip over this, but I have to share this. I'm gonna put this on probably 2 times. We'll see what the quality is there. Basically, what you're looking at, I already did the research. This is in Texas. This is Texas, because the gentleman who's doing these, investigative journalist, he says at the end, they're right down the road from Maverick Airport. Here's Maverick County Memorial Airport in Texas. So we have the governor of Texas supposedly taking on the federal government. But here's what's going on down in Texas. Let's go 1.5, see what the quality is.
Look at this. That's Border Patrol. That's Border Patrol. So Border Patrol does go in. That's Border Patrol. It has green on it. That's a Border Patrol van. So when they do this, this is sometimes a pickup spot, folks. So we'll see if anyone gets marched down or dropped off there for Border Patrol. Look, there's people getting out of that van. I can't tell what's going on. Oh! There's people getting in that van. They're doing an exchange. Let me see if I can get down here. They're doing an exchange. Yeah, look, folks. They're doing an exchange. Migrants. Look. There they are.
I'm going to fast forward.
So the van swapped them. And this is supposed to be on National Guard Texas takeover property. They're supposed to have this whole area taken over. So just east or south of these bridges over here, the bridges where you saw them, people are loaded onto the Border Patrol truck. Now that van will most likely turn left. It will go up the road, most likely to the detention center. Up the road. Wow, there's a group of them. I don't know how many there are. Now they're all going in the van. Man.
This is
Let me see if I can get a different angle. Hold on. I'm going to walk over there. I'm going to see if I can get a different angle over here. It's going to be hard because they got that tree there. Yeah, that tree's in the way. Oh, there it goes. It's leaving. Border Patrol. And there it goes. Most likely to the detention center. I think it's 277 north between here and Del Rio, up by the Maverick Airport. There's a huge.
Okay, so this is your federal government work, folks. And why does this matter? Because we have the level of corruption here that we see in our federal government is just unspeakable. This is your tax dollars at work, my tax dollars at work. And my state, before this already happened, I live in New York, was already bankrupt. It's been bankrupt forever. This is just it's gonna plow us under. So this is our government at work. Whatever you're hearing about Governor Abbott, I don't know, he may have that one area, Eagle Pass, blocked off, but they're getting through in other areas. In fact, the Border Patrol themselves are going over, picking these people up and bringing them over. Who are those other people? Human traffickers? We don't know, but our Border Patrol is doing business with them. Think about it. Horrific. Absolutely horrific. So let's get to a couple of quick takes here. This is Neil Kashkari out of the Federal Reserve, Minneapolis. I don't know if he's a voting member right now.
Central bank digital currency. Do you think that that is something that you all should be looking into seriously? To what degree should you be looking into it seriously? Just what are your thoughts on CBDC?
I mean, as my colleagues at the Federal Reserve have talked about, we are examining it. I'll tell you, my personal bias is I'm pretty skeptical. I keep asking anybody at the Fed or outside of the Fed to explain to me what problem this is solving. I can send anybody in this room $5 with Venmo right now. Right? No, seriously. So what is it that a CBDC could do that Venmo can't do? And all I get is a bunch of hand waving. I get well, maybe it's better for financial inclusion. Maybe it's better for cross-border remittances. Maybe. Is there any evidence that it is? And, they say, well, what about China? China's doing it. Well, I can see why China would do it. If they want to monitor every one of your transactions, you could do that with the central bank digital currency. You can't do that with Venmo. If you want to impose negative interest rates, you could do that with the central bank digital currency. You can't do that with Venmo. And if you want to directly tax customer accounts, you could do that with the central bank digital currency. You can't do that with Venmo. So I get why China would be interested. Why would the American people be for that?
All right, so bravo for Neil Kashkari. Now, moving on to earnings this week, we have a ton of them coming out. And we need to take a step back here for a moment and go over the week that was. Now, Tesla did not deliver. In fact, their 2024 looks horrific. We have a position on there for full disclosure. Visa failed to deliver. I believe their shares rallied off the lows of Friday, but that's dead money right now anyway in the short term. And Intel, horrible day on Friday, and they failed to deliver. So earnings are not stellar by any stretch of the imagination. Netflix, they caught a break due to the fact that their password sharing process, their protocol, got them new subscribers. Is that sustainable for another couple of quarters? I don't know. This is now the third quarter. They're taking advantage of that password protection boost, that dividend they're getting. I don't think it's got legs. So this coming week, we're going to have not much coming out tomorrow. SoFi coming out tomorrow. Pfizer, the Darth Vader of companies that's coming out. GM, UPS in the morning. JetBlue in the morning. Microsoft and AMD, Alphabet. I mean, Tuesday is going to be bonkers for earnings. Alphabet, Starbucks, Juniper Networks. On Wednesday, wow, that's the 31st. That will be Boeing in the pre-market. Watch out for that one. MasterCard. Visa did not do well. Let's see what MasterCard has to say. We're going to have Qualcomm after hours on Wednesday. That's a chip stock. The semis are very, very extended. Aflac and Insurer, MetLife and Insurer. Thursday, one company that I own, Altria, that's in my core portfolio. Peloton, Royal Caribbean, Merck, Honeywell, that's a Dow company. After hours, we're going to get Apple, Amazon, Meta. I mean, boom. What a week this is going to be. On Friday, that's Energy Day. We're going to have ExxonMobil, Chevron. So a huge, huge week in terms of earnings data coming out. Now, the thing that we need to keep in the back of our mind, and it never leaves the back of my mind when these reports get announced, is that equities are priced for perfection. Perfection. And we have a PE on a trailing basis right now of 33. And this is inclusive of the names that have already reported this quarter. So you're getting a picture of just how little the PE ratio in a rear view mirror basis, not on a forward basis, on a rear view mirror basis, is really getting ratcheted down. If earnings were that good, PE multiples would be dropping, allowing for PE expansion in equity prices. We're not getting that. Now, in terms of economic data coming out this week, I forgot to mention, oil prices jump after drone attack kills U.S. troops. God bless our troops. I think this was in Iraq. I think it was. This is a jobs week as well as a Fed week. So on Wednesday, we're going to get the ADP report. That's the precursor to Friday's Pimp Mac Daddy of them all. That is non-farm payrolls. That is coming out on Friday. Watch average hourly wages. The stock market does not like high wages. They hate it. They despise it. While it seems counterintuitive, it's a fact. If the Federal Reserve sees wages moving higher than expected, the probability of a rate cut goes down. So watch out for non-farm payrolls. Now on Wednesday, we're going to get the FOMC Fed rate decision. I can already tell you what the FOMC rate decision is going to be for this week. Drum roll, please. It's called unchanged. Nothing is going to happen. How do I know nothing is going to happen? Here it is. Unch. How do I know nothing's going to happen? Because Jay Powell always does what the market anticipates. Simple as that. I don't need CNBC to guide me through the report. They're not coming. They're not raising rates on Wednesday. They're not cutting rates on Wednesday. They will do nothing because the market has told them, don't do anything. Don't surprise us. Now, looking out and into March, their March meeting, probability of an ease. This was as low as 40% on, I think it was Thursday. Now we're back up to, let's call it 50-50. Odds favoring a pause. Now in May, this can't be right. This is like 88% on Friday. I don't think that this is right. And this tool is wrong quite a bit. So I would not bet that this is accurate. We'll check back in. In fact, let's refresh it. I don't think that this is right. June, that's probably right. I think May is understated right now. Understated. So I think it should probably be up in the 80s right now. But we'll take it for face value. It's not crazy off. Usually it's really way off, this tool. But I would be surprised if that's accurate. But it could be. All right, so the greater risk now is that taking too long to cut rates causes damage to the labor market that is hard to repair. In November, for example, the hiring rate in the U.S. dropped to its lowest level in 10 years, a sign of more companies might feel they are overstaffed. You are seeing a lot of layoffs announced. Levi Strauss just the other day. Google, thousands upon thousands of developers gone, getting laid off. So layoffs are happening. It's for real. I wanted something else. I thought I saved it up here. The number of job holders, the number of people holding two jobs is through the roof. And that's why you're seeing the unemployment rate so low. Personal savings rate has collapsed. The credit card debt above 1 trillion. The personal saving interest payments crossing 550 billion. The consumer is headed for trouble. We've known this for a while. We've been touching upon this. The consumer is the backbone of the economy. So once the buy now, pay later bubble bursts, I think we're going to have a lot of problems in this economy. More geopolitical risk. U.S. officials believe North Korea will soon launch limited attack on South. Folks, Seoul, South Korea is literally a stone's throw away from the border, the, what do you call it? The 69th parallel? I forget, 59th parallel? Basically the demarcation line between the North and the South. You can throw a stone at Seoul. So if they launch a couple of missiles into Seoul, South Korea, the global economy is going to tank. South Korea is one of the major exporters of the world. And if they get attacked by the North, that means global recession, just like that. So keep an eye on this. I mentioned this earlier. British oil tanker on fire for several hours after Houthi attack. Dramatic photos show. Here it is. So if you're wondering why oil prices are skyrocketing, look no further than the Red Sea. And we've been talking about this quite a bit. This is getting worse. This should have been under control by now, and it's only getting worse. Let's skip this. Freight rates. So we talk about how the events over in the Red Sea can be inflationary. So what have we seen already? The events in the Red Sea are driving up oil prices. What else are they driving up? They're driving up freight rates. All of this is only going to get paid for out of our pockets. So ultimately, the charge, the expense here gets paid by the consumer. So while we may have a benign PCE report on Friday, I wouldn't expect the same if things continue the way they are over in the Red Sea. You can't have tankers on fire. You cannot have freight rates jumping like this. And as long as you have insurers saying, don't send those ships through the Red Sea, and you have to go around the Cape of Good Hope, that's only going to make this go higher. So very, very inflationary for the U.S. consumer. I really didn't go over this that much. I just thought it was interesting. In nominal terms, the Philadelphia semiconductor sector versus the S&P 500. So the percentage outperformance of the semis has actually underperformed the S&P 500 because we're just getting S&P 500 is at all-time record highs. The Philadelphia semiconductor sector is just now nearing the 2000 highs. Think about it. So is there more room left in the tank? Not quite sure, but they're certainly becoming more and more extended and quite visually so relative to where we were back in 2000. Very, very extended, ripe for a pullback. Granted, this is more of a parabolic move higher. And man, what a beautiful time that was. What else do we have here? Bankruptcy filings ripping through the ceiling. And it all coincided with the Federal Reserve beginning their rate hikes. So the consumer's in a lot of trouble here. And what are the banks doing? They're raising credit card interest rates. And the big thing that I'd be worried about going into the new trading week, the yield curve, folks. I go over this. I try to go over it every single week. I want to purposely be annoying so that people do not forget to remember what this chart looks like. Now, on Thursday night, we were a little bit higher than where we closed out the week, but this is still a respectable close on the week. We're getting ready to put in new weekly higher highs. Now, when you take a look at this on a monthly chart, with only a couple of more days left in the month, look at this beautiful breakout. We could be uninverted on the yield curve, 2s versus 10s in February. So if this yield curve uninverts in February, it could be one of the most dangerous times to be net long of the stock market in many, many years. So please remember where we're at in this cycle in terms of the steepening of the yield curve. When it's steepening, that's when it's dangerous for stocks. So please, the stock market is paying attention to this, and it's best that we pay attention to it as well. So don't forget what happens here when we uninvert. Usually the stock market goes not into a correction, but into free fall. What's going to cause it? I don't know. There's so many things out there that could cause this market to tip over. It's mind-boggling. So the stock market is ready in terms of valuation to drop. All it needs now is a little help. Pick geopolitical event, you name it. Buckle up. Have capital on the sidelines and get your shopping list ready, because after this next sell-off, there's going to be a lot of bargains out there. So get your shopping list together. Get ready for the next great panic. All right, I have time here, so let's go through some comments and we'll go to some chart requests. In fact, I need to bring up the members and their requests. Talon, I got you, brother. I know about you. Okay, bear with me 1 second here, and we will get going on chart requests. All right, we have Talon with Disney. Okay, let me just get my little list out here. We'll go to Talon first. Hey, Pat, how you doing, pal? Good to hear from you. How was Europe? Did well last week, AAL? Last week? Sure, we can go over it. Okay. You were in Jordan? I know you were in Europe. You were in Jordan as well? Affirm, buy now, pay later stock. Yeah, let's go over that stock too. The street will let us know how well buy now, pay later is doing. We have minimum wage hike bill in my town on the ballot next month. This will drive up unemployment if passed. I'm next to Seattle, so we'll, okay. Hope for the best for you, pal. Nice, nice. The attack was in Jordan. We have troops in Jordan? I didn't even know that. Why am I not shocked? Okay. Netflix. Again, we have a position. I have 2 positions there. Rumble. What else do we have? NVIDIA, AMD. Diz, we got PBR. AMZN. Remember, a bunch of these folks are reporting earnings soon, so please be aware of that. If I talk positively about it or negatively about it, always know where Bonnie Bean, where your earnings reports are, and position yourself as wisely. Okay. Take a look at Tesla's chart after earnings. Take a look at Intel's charts after earnings. The market makers have not been getting it right. These stocks have been cratering well beyond the anticipated market maker moves on these earnings reports when they're missed. So please be careful into earnings. Now, we're going to be using TrendSpider. A minimum on TrendSpider right now is a 35% discount code. Link below. You'll probably get a better discount on their website, but still use my link over there, please, and take advantage of that discount if you want automated technical analysis. Let's clean this up. Okay, that's better. Why is this not showing my stock price? That's a first. It's not showing the stock price. Oh, it's on line chart. That's why. How did that happen? I must have clicked it. Okay, that's better. I thought I was losing my mind. Okay. All right. So Netflix, again, I have two positions on. One is a very, very wide. Actually, it's an iron condor, not a strangle. I said that. I misspoke earlier. It's an iron condor. And we also have a short position on Netflix out of the money call spread. And I think that we can continue up higher here a little bit, but not too much higher. Probably going to head up to this fractal trend line, maybe to hit 600. But when you take a look at the daily chart here, I mean, we are well above the third standard deviation Bollinger Band. And I think that before we hit that 600 mark, I think we get a pullback first. Maybe back down to 562 in that neighborhood. If we get a real serious sell-off here, maybe back down to do a retest of this fractal trend line at around 525. But I think right now the odds favor bears on Netflix. I think it's extended and will probably pull back. And the reason why I got short of it was that the RSI on a 15-minute chart got very, very overbought right here. You can see the price target, or the price was hitting resistance levels. So I went short. I could have booked profits on Friday, but I said, you know what? We're still pretty extended here. We could probably get more of a payoff. So I held it over the weekend. Let's see what happens going into the new trading week. So I think Netflix, I'm not bearish on it. I just think that it needs a pause, a pullback, and then with a scalp it, move to the sidelines. I'm not betting on a short that this stock is going to crash by any stretch of the imagination. What else do we have up here? Diz for Talon. Wrong symbol. That's Dine Equity. Diz. All right. We're still under $100 a share here. They have a war going on with some activist investors moving in. I got to tell you, I'm bullish on Disney. I think this is a brand that has been left for dead. It's horrible, horrible management. I don't care what they say about Bob Iger being the saving grace of the company. He's the guy that put this company where it is. I think he's probably the worst CEO ever for Disney. No CEO, you would think it's possible to destroy the Star Wars brand. He cut that deal. He got that brand. Good for him. Bravo. But he destroyed it. So Disney, I think as long as you have activist intervention moving in, they grab a couple of board seats. I think that Disney has more upside here. I'm a buyer of Disney longer term. I think this could be a core position. Bob Iger's got to go. The entire board has got to go. It's broken out on a monthly chart. I think this is a buy. One of my favorite stocks, honestly. Daily chart, we're at resistance. I like it. I think we're going up higher. I think it's hit bottom. I think it's hit bottom in terms of how dumb this is the Exxon Valdez. That's when you had the drunk captain that drove his oil tanker, the Exxon Valdez, into an iceberg. That's what management here at Disney did to Disney stock. Still a great brand. Many of the normies out there have really little idea of how bad this company's been managed. So the brand is still intact. I think that longer term, once they get rid of all this management, they're going to be a lot higher in the coming years. So I think this is a great opportunity. Affirm. Seymour Rivers. We're selling puts on NUGT. We have, I've sold 2 tranches of put spreads, and I have 1 tranche of covered calls on Nugget. So yeah, I'm still involved with it. I'm just collecting premium on it. I own the common as well, but not as much. I want to reduce my basis cost. Affirm. So I haven't looked at this stock in a while. Let's go to a monthly chart. Not bad, really. I mean, look at these tight Bollinger Bands. Very, very tight. I believe these are three standard deviation Bollinger Bands. It looks good on a monthly chart. Weekly chart, bearish week last week. Attempted to break it out. I guess technically it did. But I'd want to see another retest of this breakout point. So I would want to see a retest of, let's call it 39.25 per share, give or take a dime. And I want to see it hold the week, close the week out above that support level. If it fails, I wouldn't touch the stock. It's probably going to go lower. Daily view. Okay, daily chart. You have a bull flag setup forming here. You can see the upper band in red, lower band in green. You may be asking, Bob, did you draw those lines? No, that is the algorithm that does that for you. Here is the algorithm off, now on. Automated technical analysis, again, linked below. Okay, so a firm looking bullish here. Again, I would keep an eye on that weekly chart. And I would look to see a retest of 39.25, give or take a dime. If it holds it, I'll tell you what the ideal candlestick would be, is that if we drop down below this support level at 39.11 per share, do a retest of this diagonal line here, then rally by end of business on Friday to close back above 39.11. If it does that, I'd be a buyer of the stock myself. Just know when earnings are. Rumble. Okay, so I want to go to a monthly chart here. This is a stock I'm probably going to be buying. My attitude is with, a lot of people say it'll never be the next YouTube. It doesn't need to be the next YouTube. Second place is just as good, not just as good, is good enough for a micro cap like this stock, because YouTube is the world's second largest search engine. If you got 25% of their growth, this stock should be 10 times higher than where it is right now. And it's growing. They're doing all the right deals. So I like the setup here. You could argue that this is a head and shoulders setup, left shoulder, head, right shoulder, which is technically a bearish chart. So what do you do here? You do nothing. You take your crayon out. I guess that's something. You take your crayon out and you say, okay, it's got to hold this line. If I buy it now, I got to, what the hell just happened here? If I buy it here, I got to sell it on a break below $5.09 per share. Now, when do I want to go adding more? On a continuation breakout above, what was this high here? High of $8.84. I think the stock is a buy. Weekly chart. It broke out last week. I think it's a buy. Daily chart. Daily chart's telling you it's a buy. Buy. I'm a buyer of Rumble. Consult your financial advisor. NVIDIA. Now, they report earnings in a few weeks, so just be aware of that. NVIDIA, astoundingly strong stock here. I mean, wow. Wow. Weekly chart. It's trading up and into its third standard deviation Bollinger Band. You're not supposed to be there, but it's been there for now 3 weeks. I think we're due for a pause on NVIDIA. Daily chart. We have AMD reporting this week. We have Qualcomm reporting this week. We've already had Intel report. They shrugged that off. I don't think NVIDIA is going to shrug off a miss on AMD and or Qualcomm. So I would watch those reports very closely. We're flagging out here on NVIDIA. It looks as though they want to try to take this up higher. I wouldn't fight it. I wouldn't try to short it right now. I think the path of least resistance remains higher for NVIDIA. But if this gets long in the tooth on a daily time frame, I would lean into the short side, selling a call spread. Basically, it's what I like to call a beyond the horizon short. I'm not going to short the stock outright because I don't want my face ripped off. So I will sell a deep out of the money call option, and I'll buy a out of the money call option just above that strike. So it limits my loss just in case I'm really wrong. And it also preserves my buying power. It reduces my buying power in my margin account. So it just makes sense to have that insurance policy on top of that naked call. It's not a naked call anymore. Now it's a covered call. So NVIDIA, still bullish, but it's overbought. I would be shorting this if they gap it up higher. 15-minute time frame, RSI goes above 85.90. I'd be shorting it. I think that would be the blow off top. AMD. They report earnings this week. Weekly chart extended relative to the 3D Bollinger Band. It's backed off a little bit. Good volume, strong volume. Man, I remember a time when this company couldn't scratch the itch on the butt of Intel, but they kept trying, and now they are, what an amazing stock. I never thought it would do it, but it did it. AMD looks like it's getting ready for a rally in advance of earnings. Let's check back in really quick with the NQ. I want to get a vibe for how equities are behaving here since the open. They've dropped into a trading range. This is the NQ, the NASDAQ 100, basically the triple Qs of the futures market. So not a lot of selling behind that initial open. So they could easily open this up tomorrow morning. So back to AMD, I think that it could break out on Monday. PBR. We have energy stocks reporting on Friday. Yeah, Petrobras, yep. We have a monthly chart here. Major breakout on a monthly chart. Beautiful. You're going to have resistance up here. It's rising, so it's hard to make the call. Let's call it around 18.35, $19 a share, pretty wide. It all depends on how long it takes to get up there before you know whether or not it's resistance. If it takes a month, well, it could be $20 a share. All right, but right now it's at around 18.35 per share. Weekly chart. You're going to have resistance early on this week at initially 17.35, then 17.91, then 18.32 per share. And that's the weekly resistance level I just mentioned a moment ago. Volume on Friday on this breakout, volume last week, this is a weekly chart, was really good, setting the stage for a continuation breakout. Daily view. We broke out on Friday. Watch for a retest on Monday of $17.04. If it closes above that mark, buy. I would be a buyer of PBR. Very bullish on it. Energy stocks are doing well. If you want to take a look at how PBR performs relative to, we'll do a ratio chart of PBR relative to, use the USO oil. PBR is beginning to outperform even oil. And if we want to see the correlation, how tightly they're correlated, they are, at least on a daily time frame, they're not as highly correlated, but it's improving quite a bit. Let's go to a higher level view. Let's filter out the noise here. Monthly view. Yeah, that correlation was much higher. It's improving though. So PBR, wow, what a stock here. What a breakout several months ago. This has not had the correction that U.S. energy stocks have had. I mean, remember this chart because I'm going to bring up the XLE in a moment. Look at this chart as compared to XLE, which has done a lot of nothing over the past few months, but this is getting ready for a breakout. I'm loving the energy sector right now. So PBR, I would prefer the XLE over PBR right now for the only reason being is that XLE has a lot more catching up to do than does PBR. PBR's had a really nice run. I'm not saying it's done, but I think XLE has a lot more catching up to do to PBR. Amazon. Weekly view. I think Amazon could still run here. We have quite a bit of overhead supply on Amazon at 163.20 and then at 167.21. Volume last week was very good. Daily view. It's stuck. Amazon's stuck. They tried to break it out on Friday. It got rejected. What they need to do here on Amazon is to gap it up and above resistance here at around 159.20 per share. Let it consolidate there for a couple of days. If it consolidates there for a couple of days, holds it, Amazon's going up higher, up to that 163 mark. So I'm bullish on Amazon. I think it goes up. They do report earnings next week. Be forewarned. AAL, great earnings report last week. Weekly chart, it broke out. RSI strong, volume strong. Weekly chart looks really, really good here. Daily view. A bearish key reversal bar on Friday. That's a bearish chart. One of my top 5 favorite candlestick patterns. Link below to my top 5 favorite candlestick patterns. Free. So you may get a retrace on AAL. I would look to buy it at around $14.89 if you're into the airlines. $14.89. AAL, that's where I think it's pulling back to. Mara, this is going to be our last stock up. Mara, this is a crypto play. Let's go to the weekly chart. Nice reversal bar last week. Closed just off the highs of the week. Let's take a look at the monthly chart. Not loving the monthly chart at all. You have a lot of resistance immediately above. This here is your 21 period weekly EMA in orange. Then you have this fractal resistance level at $20.62. And you have the next resistance level up at around $22.75. So a lot of overhead supply here. I'm not overly bullish on Mara, especially with Bitcoin pulling back. Daily chart was pretty good. So it's probably very tightly correlated to Bitcoin. Let's do a quick peek at how correlated they are. Yeah, there's about a 75% correlation between Mara and Bitcoin. And this is a monthly chart now, so that's about 69%. So there's a very tight correlation between Bitcoin and Mara. So as goes Bitcoin, in all probability, so goes Mara. So I'd watch Bitcoin very, very carefully if you want to put a trade on Mara. Folks, thanks for being here. Like, subscribe. You know the deal. Have a profitable trading week and enjoy the rest of your Sunday. Thanks for being here. Take care, folks. Bye-bye.